Well, on January the 1st, the federal government rolled out a new mortgage stress test meant to cool housing prices. So what does that mean for buyers and sellers? I'm joined now by Sean Cooper, author of Burn Your Mortgage. Sean, always nice to see you. Good morning.
Good morning, Jeff.
All right, let's just start with the nuts and bolts if we can. The stress test, what is it exactly and what does it mean for home buyers and those looking to renew?
Sure. So if you're looking to buy a house in the new year, you'll have to qualify for the stress test, and it's for people with putting 20% more as their down payment. So under this stress test, let's say your mortgage is 3%, you'd have to qualify at a mortgage rate that's 2% higher, so 5% in that example. And what that means for the average person on the street is that their purchasing power would be reduced by about 20%. So before the new stress test came in, let's say you could spend about $500,000 on a property, it would be reduced by about 20%, so you'd lose about $100,000 worth of purchasing power, and you'd only be able to spend $400,000. So that's just one example there. And it also affects people renewing their mortgages, because if you stay put with your current lender, you wouldn't be subject to the stress test. But if you're looking to shop around the market, which is something I recommend in my book, you would have to qualify based on the stress test of 2%.
So obviously it makes it a little more difficult for people to find a competitive interest rate.
Exactly.
Yeah. All right, let me ask you the reason why. What is the purpose of this stress test? Is it to protect buyers from getting in over their head? Is it to cool the real estate market in some cities, or both?
Yeah, I definitely think it's a bit of both. I mean, the stress test is causing some people a bit of stress, to say a pun, but yeah, I definitely think it's a bit of both because, you know, we've already seen interest rates creep up. We saw a couple times last year the Bank of Canada raise interest rates, and there's speculation that they're going to be raising it next week. So I think it's to protect people from, you know, getting in over their head. And, you know, sometimes life throws you curveballs, like you could lose your job, or, you know, unexpected expense like your roof might need repairs. So it's just good to kind of have that financial cushion in case something like that happens.
All right, so we have this new stress test. We have interest rates increasing. Is it still a good time to buy a home?
Yes, I definitely think it is. I mean, real estate is very regional, but here in the Toronto area, we have a balanced market. And I think if you're financially ready to buy a house, you've saved your down payment, you can cover the closing costs as well as the ongoing expenses of a house. I think it's great. And real estate, like the real estate market and like interest rates by historic standards, are still like a steal of a deal. Like you can get a 5-year fixed rate interest mortgage for under 3%, which is, you know, great by historic standards.
Just quickly, let me ask you, if you fail the stress test, is there a way around it, or are you out of the housing market?
Well, there are definitely creative ways to still get into the housing market. For example, you could buy with family or friends. You could buy with like a family member such as an aunt or uncle, and there are actually lenders out there that have mortgages specifically for that. And if you can't afford in a big city like Toronto or Vancouver, you could try to buy a property in a more affordable market like you know, Waterloo or London, Ontario, and actually rent in the city, build up the equity, and then when you have enough money, you could buy a property in the big city. So there's certainly ways around it.
All right, Sean Cooper, author of Burn Your Mortgage. Sean, appreciate the time and the perspective. Thanks so much.
My pleasure, Jeff.